I think critical to any investment where there's front-end losses, and the Australian small cap market doesn't really like investing in these type of companies, because we've seen so many of them with, I guess, failed concepts. So when we triage or look at these types of stocks, what we're interested in is the size of the potential market, where they sit relative to having either a first mover advantage or a truly sustainable competitive advantage, and how that translates to how much cash they have to burn, how much cash they've got at the moment, how they can fund where they need to get to, and whether or not at that point there's a truly sustainable business. Now, that often it takes longer to get to that point where they are making money and is a sustainable business that you can put a valuation on, but you've got to have a path to having a reasonable basis for that to occur. So companies that we do think that can occur in are Freelancer, Aconex, and we've recently invested in Temple & Webster, in an IPO for Temple & Webster, where they're not a technology company, but they're entering the space of online retail and homewares and furnishings, but they're burning around $8-9 million a year, but they've raised enough money to potentially get to a point where they'll be EBITDA positive, whether that's 18 months, 24 months. That's not in the forecast prospectus. No one really knows that, but there's a path to them grabbing a bigger share of what is a reasonable business in Australia. So they can go from maybe 3-4% market share is online for homewares to circa 10-12%, which is the US, and that could give them a business which is, they're floating on $76 million revenue, could give them a business that maybe generates $300 million of revenue and $20 million of profit, and that will give them a similar valuation to an Adairs. That's a very, very good question. I guess in the case of Temple & Webster, we look at you can look at Google Trends to see how the core brands are tracking over time, whether or not they're peaking, or if there's a good upwards trend and people are associating the business name with having some validity. You look at product reviews online. Temple & Webster, there was 300 product reviews that I found, and there was a steadily increasing level of product satisfaction from a low base. So we look at that, because in an online business you have to, like every other business, really satisfy your customers' needs, but it's so much more critical when you are trying to build a business that you are really delivering what your customers want. So we do go and try and find as many sources as possible. We speak to industry players about the competitive dynamics and where they see the industry going, so that we can get a sense of what the prospects of the business are. And the most important thing, does it make common sense? Does this product or service provide something that is better than the alternative?